there will always be something coming or some uncertainty, whether that's in the
Mhm.
marketplace, whether that's an election, whether that's something overseas that is hard to really predict. But I think getting the right tax and legal provider and
Yeah.
partner with you is really important because they're going to be able to help you understand structure. And I think that there's a lot of interesting ways that you can really craft how the acquisition or the divestiture or whatever you're trying to
Mhm.
do.
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. Today we have Nicholas Spezio. You got to see it this way, I think.
How you
And
doing?
he's the M&A advisor. We're going to talk a little bit about venture cap, fintech, and how he can help us out. But he joined a company called Expo Group in 2021. He leads the transaction services practice. He actively supports buy-side private equity, venture capital clients through the full life cycle of the acquisition process. We're going to talk about a little bit how he supports the sellers as they prepare for the financial due diligence and all that stuff that we hate as business owners doing on our own. How you doing, Nicholas?
Doing very well. Thank you so much for having me.
Absolutely. So, as we always do, give us a little bit about you know background with you, how you got in this, and why we should pay attention to you as far as your expertise on what it is your specialty.
Absolutely. Spent almost 10 years in public accounting at top 10 firms, started my career at a mid-sized firm and then transitioned over to PwC
Mhm.
a little less than 2 years into my career and spent the majority of my years in public at PwC auditing big hedge funds based in New York City. Really wanted to make partner, loved the PwC experience, loved everything about it, a little bit of a glutton for pain of the busy seasons and the long hours and
Mhm.
just really enjoyed it. And Expo Group came knocking one day and during COVID and they were a small business at that point. There was only 6 or 7 employees and I was really interested in the prospect of helping to build out this practice and build this business with them. And I've been here for about 3.5 years. We're close to 50 people at this point. And we do two main things. We do fractional CFO, finance as a service business, ongoing finance support for venture-backed seed, Series A, Series B type businesses. Started in fintech, ed tech, have really diversified at this point. And then we also work with private equity backed businesses and
Yeah.
some owner operated businesses. And then, as you mentioned, I lead the transaction services business, working on both the buy side and the sell side.
Mhm.
And we do a lot of technology deals, helping both buyers and sellers understand the nuances of transactions and really able to kind of um, understand where there could be potential issues in trying to
Yeah.
mitigate and resolve those issues upfront and as quickly and as reasonable as possible.
So let's talk a little bit about something in my world that you don't realize. It seems like whoever's in Washington, and not this isn't political or anything, but rules and laws change. You know, this group wants to do it this way. This group wants to do it this way. How did you keep up as far as something like big VC groups and large private equity groups? When I say it's like, look, okay, I'm going to sell a portion of something, and I'm going to net $4 million and I do hotels, and all of a sudden it's like, oh crap, here's now 1031, but now interest rates are up. Everything sucks and everything's this. I don't want to buy anything right now. How do
Yeah.
you handle kind of the differences between and how would you talk to someone? It's like, okay, I've got a sale coming up, but now maybe it's not the right time to sell. What are some of the things that you kind of your thought process of, or we need to put it into a deferred trust, or do we need to do some of the stuff with the money?
It's a great question, and I think it's one that there will always be something coming or some uncertainty, whether that's in the
Mm-hmm.
marketplace, whether that's an election, whether that's something overseas that is hard to really predict. But I think getting the right tax and legal provider and
Yeah.
partner with you is really important because they're going to be able to help you understand structure. And I think that there's a lot of interesting ways that you can really craft how the acquisition or the divestiture or whatever you're trying to
Mm-hmm.
do can be. And one thing that we've seen this year that's been really interesting is a lot of equity swaps. So instead of a buyer taking on expensive financing from a lender and doing a traditional leverage
Yeah.
buyout, we're seeing more creative ways to change that control or to merge or to come together with another business where there's a lot of synergies and there's a lot of strategic benefits and positive outcomes that can come in a way that is tax effective and you're not losing half of your money in terms of the acquisition. For sellers, they typically want to structure the deal as equity deals because the majority of the business is baked into goodwill for everything that they've built over these years and the valuation that's put on top of the assets or the net asset value. And then you're taxed at long-term capital gain rates.
Mm-hmm.
For buyers, they obviously want to structure it more as asset deals that limits and mitigates their liability. And also there's some tax advantages for them in terms of re-fair valuing their assets that they're purchasing and then redepreciating those. But there's always a middle ground in terms of where you can get to with the buyer if you're a seller in terms of getting to a good place where it's mutually beneficial for both parties.
Yeah. And what are some of the red flags that you look at? So someone's going to um, look at an acquisition, and they're doing the due diligence. What are some of the ways you help them? Because I don't know some of the maybe the tax due diligence or the financial due diligence, some of the red flags that you see that could help us listeners if they're going through that right now.
Yeah, from a buyer's perspective on
Mm-hmm.
the financial side, one thing that we always look at is the quality of the revenue and really understanding what's recurring versus non-recurring.
Yeah.
So being able to bifurcate between the two is a really important metric for us and understanding what that concentration between the two revenue streams are. And then diving further into that, when you have that recurring revenue, how much of that is upfront, i.e., is it deferred revenue? Is it unearned? Is there a
Mm-hmm.
cost to service that revenue in
Yeah.
terms of hosting, in terms of your customer support? And what does that translate into deal dynamics in terms of potential purchase price reductions or purchase price adjustment for the cash that needs to be held? Are there termination rights? Can customers get their full refund if they do cancel their contract? And what are those implications? And then there's also, different types of analysis that you could look at in terms of churn. How many
Mm-hmm.
customers are you losing on a gross basis? How many customers on a net churn basis in terms of looking at your upsells and your downsells and your churn? So there's a lot that we look at in terms of that. And then in terms of tax diligence, the risk is typically, compliance issues. Are they actually filing? And then is there any sort of
Mm-hmm.
sales tax exposure? The laws with SaaS and technology-based businesses is really nuanced, obviously from a federal level, but it varies significantly on a state level too. Certain states tax it, others don't. There's certain nexus implications that need to be thought about. So we've seen a lot of our clients this year identify those risks, identify the dollar value, and then go to the state and say, look, like this is what we think our exposure is. We want to
Mm-hmm.
settle this and we want to do right. And then, kind of squash it before the deal is consummated.
Mm-hmm. And what are you seeing as far as the states? Are they willing to play the game a little bit, or they're like, oh no, we need the revenue right now, and just do it? Or what are you seeing? What's the trends I'm sure different states are different, but
Yeah, I mean, I think what we're seeing is states are receptive to when you approach them with potential issues like you not calculating sales tax correctly.
yeah.
There isn't, there's a few programs and a few softwares that I think are the big names that do a good job, but for the most part, I think ignorance is bliss for a lot of sellers. You're focused on building and growing your business, getting new clients, retaining your clients,
Mm-hmm.
finding good employees and retaining those. And I think there's maybe a misconception that SaaS and technology are not taxable, and that's just not the case anymore. And so I think states are receptive to in good faith, you know founders going to them and saying, look, like we think we have exposure. We think it's this amount based on what we've calculated, and we want to settle with you. And I think that's a good way to, mitigate potential issues post close, and also mitigate what the potential holdback is of the purchase price if you are going to sell a technology business. So you get more cash up front too.
Are you seeing a difference with, in my space, the difference of what the sellers think the business is worth and what the buyers think it's worth? It's like the sellers, it's like, yes, it is worth 3 times gross, 4 times gross 4 years ago, before interest rates, before the economy. And the sellers are like going, look, my DSCR, the debt to service income, the ratio is just not there. It's like, I can't do it. Are you seeing that in your world, and how are you resolving some of that? I know we talked about, maybe more of an equity deal, but what are you seeing that as far as just this difference?
Yeah, I mean, our clients are seeing that all the time. There's a great report that just came out from PitchBook that details the valuations for public companies and
Mm-hmm.
technology, CRM, ERP type technologies, a variety of different kind of technologies, but it shows the drastic decrease in
Mm-hmm.
valuations from 2021, early 2022 levels to
Yeah.
today. And they've decreased significantly. I mean, in 21 and 22, when the markets were extremely hot and everything was scorching, sellers were able to turn their businesses over at, ridiculous EBITDA multiples and revenue multiples. And that's cooled significantly, especially with the cost of financing being where it is today. And I think that there still is that element of sellers having some sort of unrealistic expectations.
Mm-hmm.
And I think the way to sort of resolve that is, either from a seller's perspective, you have to be patient and you just have to find the right buyer, even
Mm-hmm.
though that market is probably drying up because they see other transactions in the marketplace that are probably from an EBIT perspective are at 8 to 12, and on a recurring revenue or maybe at 4 to 6 to 8,
Mm-hmm.
depending on other elements if there's payment processing involved. But one way to solve that is to structure a bigger earnout. If you are confident that your business is growing at a good compound annual growth rate and you feel strongly about where you're going, structure more in potential earnout, and if you hit those hurdles, you get more money.
Yep. Yeah. And I've seen some where the sellers will say, hey, they'll carry something, and to kind of get it going at maybe a reduced rate. But and there's also some banks and some financial institutions. They're just like they're cold now. They're like, we're keeping our cash. We're not lending unless there's an LTV of 40% or something like that. Um, how are you getting around some of that? Or in your world, is it more of a VC type of play instead of with banks and things like that?
My world is more private equity. Kevin
Private
and
equity.
Eric, yeah, on the other side of the business, they see a lot of venture. That industry has definitely dried up significantly. There's
Mm-hmm.
less LPs and there's less dry powder in that
Mm-hmm.
industry because of some of the implications of some of the deals that went south from those extremely elevated valuations to where they actually should have been.
Yeah.
And so there's a little bit of bad taste, I think, in venture, and they're being much more strategic and much more careful and much more intentional in terms of the diligence that they're doing on the deals. The diligence that we've done on venture in AI this year and technology
Mm-hmm.
is very much more intense. They are very particular about the ARR that they're underwriting to and the
Mm-hmm.
contracts. And we're not seeing the number of deals go through the success rate that we did in earlier years where everybody was just trying to deploy capital.
Yeah.
Now it's like they'll eat dead, fees, dead deal fees because they want to get the right deal in place. So that's a big thing that we're seeing this year.
So how do you tell the seller, or how do you analyze with the seller that it is a good time to sell in today's market? Or are you telling them maybe they should consider waiting to a later period, and what and when that period might look like, how do you kind of grasp and tell that person? It's like going, maybe you should wait till after the election. Maybe you should see what middle 2025 looks like. How do you even analyze something like that?
I don't know if you really can. I mean, it's like, hindsight's 2020
Mm-hmm.
almost. It's like, there's never a perfect time to, I wish I bought the house that I live in right now in 1999 or 2000, you know what I mean? But I
Sure.
bought it last year and it is what it is. I got a
Yeah.
higher interest rate and I bought it at an elevated price, but prices have continued to go up in terms of real estate. In
Yeah.
terms of business, it's the same thing. You don't know where the market is going to continue to go. And my recommendation is if you're considering selling your business, everyone's story is different. And I think you need to be the one that really analyzes and thinks about what you want your future to be and what you plan on doing after you go through this process of selling your business. And I think the
Mhm.
best exit events for both sellers and buyers are ones where they are aligned in terms of what is going to happen to this business. I mean, these sellers, these entrepreneurs, these people that have built these businesses over the span of 10, 15, 20, 30 years, there is significant, just sweat and blood and tears and
Yeah.
sacrifice that has gone into these businesses. It's truly like their babies. They care about them, and there's employees that work there that they care about,
Yeah.
and there's customer relationships that they care about. And so making sure that you're comfortable with this decision and also handing it over to the right strategic partner is extremely important.
Hmm. Yeah, I can see that because you don't want someone in, for instance, private equity group go in and just slash, because all they
Yeah.
want to do is make it look good so they can sell it in another 2 years to another private equity group, right? And that's one of the considerations, isn't it?
I mean, that's the game, right? I
Yeah.
mean, for the most part, you're buying a business with a timeline horizon of somewhere between 3 and 7 years, and there's only a couple ways to increase the value of the business. You can be accretive through acquisition. You can continue to do add-ons, but the other game is there's only really two levers. You have to sell more or increase your prices and get more customers or offer new services and products,
Yeah.
or you have to figure out economies of scale and operational synergies
Hmm.
and you know not rate figure out how to cut your expenses, whether that be fire people or outsource or whatever it is, but you're going to try to improve your margins to make the business grow, be more profitable, and be more desirable and more marketable for that next turn.
So let's talk about your company. We've kind of talked a little bit about what your group does and what you do. So let's go to it's ladies and gentlemen, exbogroup.com, EXBO. They click on the site, go to it. What are they going to find, and what are they going to learn?
They're gonna see a group of hungry professionals that are looking to help both buyers and sellers, investors in the lower middle market, small to medium sized businesses, do two things. One, help businesses, venture backed businesses, private equity backed businesses, founder owned and operated businesses that need finance support. They need someone to help them with the ongoing accounting. They need someone from a fractional CFO perspective. They need someone to help them with forecasting their business, their cash run, their burn rate, their ARR, their employee um, targets in terms of what they want to hire. And they just need someone in that desk to take care of that so they can focus on running the business. And then on the other side, they're going to see a group of professionals that are focused on M&A and doing transaction services, helping buyers assess the financial health of the target that they're acquiring and making sure it's a good target and a good acquisition for them,
Mm-hmm.
helping them navigate the deal. And then on the sell side, it's helping sellers make sure they're not leaving any cash on the table, that they're understanding any sort of deal implications, any risks, any sort of potential purchase price reductions that they need to be aware of, and really putting them in the best position to succeed. And if your audience is mostly founders and in ed tech or
Mm-hmm.
venture, the my advice to them is always to take your time in terms of you know going to market and making sure you're all buttoned up and you've crossed your T's and dotted your I's and you know what's going on before
Yeah.
you rush to the market.
So, for listeners that are out there that just started their business, maybe they're 3 to 5 years into it. When I know it's different with the companies. When is a good time? When do you kind of know as a founder that, you know what, I need to up the game and get help? I have a little bookkeeper. I have my Excel spreadsheet. Now I'm growing. It's getting a little bit crazy. When do I need a CFO?
Well, if someone hasn't told you in terms of a board member, an advisor, or an investor that you need a CFO or a fractional CFO or a bookkeeper to come on to help you with this,
Mm-hmm.
I think you'll naturally know when you start to look at the books and you're like, where are we going? What is this number? Why do we have this?
Mm-hmm.
How much money am I going to have next month? Why is revenue down? Like when you start asking all these questions and you feel that angst and anxiety about your books, it's time to bring in someone who knows those answers, who's prepared to give you those answers, and that can help you think about the business more strategically
Mm-hmm.
so you can forecast it for the next 2 or 3 years. Because as a
Yeah.
founder, as an owner, the finances are important, but you should not be spending time focused on closing the books. Like you just need to know what you need to know to
Mm-hmm.
run the business optimally.
And what's the advantage of something that Expo Group does instead of bringing someone in house?
I think the strategic value prop that we offer is that we have had hundreds of clients over the last 7 years, spanning
Mm-hmm.
across various industries, various verticals, and with various investors in various kind of stages of their life cycle. Very early pre-revenue businesses, seed, Series A, Series B, private equity backed, every single type of kind of strategy that you can imagine. And so I think we bring a wealth of knowledge and background and experience that we can really help craft the financials in the most advantageous way um, for that founder. And I think it's a nice way to kind of scale into something. If you bring on a CFO, professional services CFOs are probably the most expensive they've ever been, just like everything else with inflation. So it's nice to be able to pay 5 to 7 to maybe 10 grand a month to have an Expo Group or another fractional group that does what we do in house, and you can kind of scale up or scale down based on what your needs are.
Yeah, and it's fantastic. It's what I've learned with our fractional CFO is it doesn't matter what you cost per month. If I get that back at the end of the year, twofold or threefold, it's like going, wow, yeah. It's because, what I realized is I had no idea I could save money in these different areas if I did certain things. I own the business. I am not the accountant. I don't want to be the accountant. I can't stand Excel spreadsheets. I just want to go out and buy assets. But what I
Beautiful.
but what I don't know is like all of a sudden, why aren't you doing this? Why aren't you doing this? Did you know you could do this? I'm like, oh no.
Mm-hmm.
And they're like, okay, can you go back and give me all that 5 years ago from now? You know. So, ladies and gentlemen, what Expo Group does and with the fractional CFO work, especially that, and that's what I know is the amount of money that you could all of a sudden save on things that I didn't even know existed, just setting up the LLCs a certain way, or just integrating things, involving the way that they do the taxations. It's just absolutely amazing. Um, so before we let you go, is there anything that I missed that you'd like to tell our listeners about your company or about what you do specifically?
The only thing that I would say is, whether you're buying a business as an entrepreneur through acquisition, venture investor, an angel investor,
Mm-hmm.
wealthy individual that's looking to buy a business, it's really important that, you spend the time, whether that's you engage someone like myself or another reputable firm, but you do the due diligence on that target and you really understand what's going on with it. You lift up the hood, you look underneath, you kick the tires, you understand how much gas is in there, when they got their last oil change. You really do your diligence before you buy that business, because it's really
Yeah.
important to know those things. It's really important to take your time and not rush to the finish line, even though it feels like there's a lot of pressure. And
Mm-hmm.
from the sell side, if you're a business owner, it's sort of the same thing. Before you engage a banker or an advisor or a broker or go to market yourself or answer that email or answer that hopefully handwritten letter that an investor or buyer has sent you, make sure you're taking some time to really look in the mirror and know that you want to sell this business, because once you sign up for it, once you sign that LOI, you have a lot of people that are coming, knocking on your door, looking at everything, and you want to be prepared. You want to put yourself in the best position to win. You want to understand working capital. You want to understand the nuances of the
Yeah.
deal so that you put yourself in the most favorable position. So I think really taking your time and um, finding the right partner is really important in terms of getting it right from an exit opportunity perspective.
Yeah. And now, do you mainly stick to U.S. based or North American based, or do you do some things around in Europe also?
We do. We've done some deals in Europe. We've done some deals in Canada. We've done some deals
Mhm.
in South America. But I'd say the bulk or the lion's share is in North America. It's in the U.S.
Yeah. Yeah, that
Yeah,
makes sense because it's man. Now let's talk about the world stage and what's going on. It's crazy.
there's a
Uh,
lot.
it's going on. Well, Nicholas, thank you so much. How can people find you? Expogroup.com. Do you have an email if they have questions, or LinkedIn, or
Yeah, LinkedIn is great. You can always email me, nicholas.spezio@exbogroup.com, and would love to hear from anyone that is in your audience.
and Spezio's Spezio, ladies and gentlemen.
How you
Nicholas,
doing?
Nicholas, thank you so much for coming on the Richer Geek Podcast,
Thank you
and
so
have a
much.
great night.
You too.